Good afternoon, everyone, and welcome to this presentation of Gaming Innovation Group. My name is Oskar Rönnqvist, and I am an equity analyst here at ABG, covering the iGaming sector. With us here today, presenting, we have Hessi Mokka, who is the head of investor relations at Gaming Innovation Group. The scene is yours, Hessi.
Thank you, Oskar, for the great presentation. So I will touch up on our company and tell you a little bit brief about Gaming Innovation Group today. We're approximately 460 employees in the company. We're located in three main places, Spain, Denmark, and Malta. We have our head office in Malta. We have 14 global licenses on our platform, and we're dual listed on NASDAQ and also Stock Exchange. We're a B2B company who provides mainly two verticals. One is the platform vertical integrated with a sportsbook, and then we have the media business, which we in Nordics call it for the affiliate business. I will go into those two divisions in depth going forward, but that's mainly our two main income streams. And together we also have a managed services department where we manage clients for either if it's affiliate business or if it's the sportsbook or if it's the platform business. And so that's the two main income streams that we have in the company. And this presentation is from the Q3 report, which we had 2 weeks ago. So I will touch a little bit upon it. You have the numbers behind me, or you can look it up at our webpage, but I will briefly go through what we have done. Since 2020 April, we divested our B2C company and we to Betsson, and since that we've become a pure B2B company, which means we provide operators in multiple markets with either if it's platform as a platform supplier or a media affiliate supplier. And our figures since we split the company up and sold our B2C division to Betsson has, as you see in the presentation, we've been growing quite heavily in revenues, EBITDA and EBIT, and we're very happy with the progress of the company. And some key takeaways then for Q3. We had the positive development in all areas, both platform and media business. We had all-time high revenues on our media department, which we're very proud of. We signed 3 new agreements for the platform. One went live, and 3 others are expected to go live in Q4. And some strategic update then for the company. Here you can see I will take this part to talk more about our platform division. Here you can see that we have some of our signings the last 12 months. And since our strategic review, by selling our B2C operator to Betsson, we've become, we don't have any more conflict of interest where we have our own B2C in-house and therefore, since we sold it, we've been able to attract a lot of clients in markets we have licenses in. And 2 of them that I want to talk a little bit extra about is, one is the Tipwin contract that we signed, and which is the 3rd largest sports betting, land-based sports betting company in Germany, which we're very proud of that we won. And the next one, which is a very interesting brand, which is Playstar, which are going to be live in New Jersey and Pennsylvania during 2022. Very, very, very excited about those clients and the other one as well. But these are the ones that are standing out because it's 2 very big markets. If you look at our pipeline today, we've said that we will sign at least 10 deals, and so far we signed 8, and the momentum is strong, and we stand firm of our guiding on that. One thing that is very important for us in the platform industry is that we are able to get our platform certified in multiple jurisdictions and do it efficiently, which I will touch upon further on in the next slides. Here you can see down to the bottom right, you can see our licenses in markets that we have for our platform. We have today, we have plus 14 licenses for our platform to be operating in regulated markets. And that's a very good key metric for us to get our license. With the world regulating, it's very good for us to get our platform licensed in those markets that we want to go into, so our addressable market will grow bit by bit. And as of today, our roadmap for 2022, we're looking for at least 5 to 6 new market entries. With one is already ahead of schedule there. So we're looking at Serbia, we're looking at Italy, we're looking at Pennsylvania, we're looking at several markets where we can see there we have a lot of interest of clients that want to sign with us. And therefore we're seeing the potential to grow the brands in those markets as well. And if you go into the media department, which is a very high scalable business, and this is a part where we've been very efficient the last 2 years, and this is the part where I'm most impressed about with the first-time depositors that we put into the market that we signed today. Is 95% of those are on a revenue share base. So we're very excited about that part because that's a perpetual revenue, and that's the plan that we have for our media business to grow, even if it's seasonality or even if it's a market has a hit or whatever it can be. We're seeing that our revenue share base contracts that we sign going forward is becoming us to have very good revenues going forward. I'm very happy about that. And during 2021, we have invested quite heavily in US market. We haven't solved the puzzle yet, but we're seeing that our big brands like World Sports Network increase traffic 55% year over year. And we're looking further into investing in 2022 in the American market, which will be a prioritization for us going forward. And if we just deep dive a little bit into these 2 verticals that we have, we saw that we have a growth of our platform revenues to 5.7 million euros and EBITDA to 0.6 positive. And that's the 4th consecutive quarter where we have positive EBITDA. You can see on the bottom chart that we had a white label solution going into 2020 after we divested our B2C operations, and that wasn't a solution where we thought that the market will. It's a very high risk market where operators operate on our licenses. So if there's a fee or a fine, then we will have to take care of it. And the board and the management took a quick decision to get rid of the white label model and instead focus on the SaaS business, which we since Q2 2020 we've seen pretty good growth. And as all the B2B companies or B2C companies, we've seen us getting hit by the German regulation, which we managed pretty fine despite that. So if you look at our revenues right now, we have approximately 80% of our revenues coming from regulated or soon to be regulated markets, which is a very good KPI for us and the platform business. This is a very interesting chart where we can see that in 2020 we took the company from the white label business to SaaS business, and you see that we had 5 clients integrated that year, and as of today, as of end of Q3, we had 7 clients integrated, with 3 more happening this year, and that's a very good way for that's a testament of our company being more efficient and being ready for the new regulated markets. And that number I hope will increase going forward. And this is something we worked very hard on to become more agile and be able to sign and integrate clients faster. And that's where a lot of our investments have gone to the platform in the latest 12 months. So very happy with that development, and I think that, and I hope that we going into 2022 and onwards will even speed that up. So to talk a little bit about media services, as I said before, we had all-time high revenues in Q3, and it's also, you can see also that since our divestment and our focus went straight to just becoming a pure B2B provider, we're seeing revenue growth quarter over quarter. Those guys are doing a terrific job. They're a standalone company as of today, where they run their own operations from Denmark, and they've been doing really good work. We increased our revenues to all-time high revenues to 11.2 million euros with an EBITDA of 5.1. We're seeing a little bit more investments for us in the particular North American market, because we want to take that piece of the pie as well. We mainly have two separate income streams from that media department. One is paid, which we use, I can explain, like we're buying a search word in Google, and where we can get ranked number one. And the other one is publishing, where we put out review sites and let them grow steadily in every market that we enter, and hopefully have very good keywords. Both those departments has been showing tremendous growth the last year, and despite us having spending very little money, we're seeing that now with our cash balance being better and better, we hope that we can invest more in certain markets and improve our products so we can further enhance the efficiency in the media department. But they're doing really good, and we're very happy with the development in this specific area. And this part is what I'm most proud of. If you look at our revenue stream, we have 62% of our revenues are coming from rev share, which is perpetual revenue. I think we have the highest number of all the competitors that I looked into. It's a way we look at the media business is we rather take small amount of money lifetime instead of taking one-time fee up front, which is listed as the CPA. We think that's the right strategy to go, and obviously it's been very successful in the last 12 months or so. And if we have to drink some water, sir. If we look for some updates after the quarter, we signed a long-term agreement with a German client, a very interesting client which already had a database, who wants now to enter the regulated German market, and we believe that's the type of clients that we are targeting in those markets. Either it's clients with own database, or if it's a big, large tier 1 clients that want to move their markets to other places, or if it's a media house or a tier 1 land-based client. So very happy with that client. Our sales pipeline remains very strong. We are currently having ongoing discussions with plus 60 targets. So and we're building that sales pipeline up. So it's quarter over quarter, month over month. So we're very happy with that. We're seeing strong momentum in that, especially with COVID, accelerated the movement from the land-based to the online market. And we're seeing significant interest in our product. The Netherlands closed in Q3 as well, end of Q3, and we didn't have that much revenue over there. That impacted us approximately 2%, which was legacy revenues. And revenues for October were up 23%. If you exclude the white label and German impact, we're up 41% year over year. And mostly of that growth is driven from our media business, which had a year-over-year growth in the first-time depositor with 85%. And that development has continued into November as well. We can see strong momentum in the first 2 months. And we had a Google update end of November. And as we can see it today, we had a net positive from that Google update, and we're very happy for that. So that means that's a testament that we're doing a very good job in that area. And if you look at our financial target and our plan is we want to grow organically with double digits. We want to reach our EBITDA margin wants to be 40% in the next coming years. And we want to use cash generated from the business to lower leverage ratio. So to summarize then, since the strategic review in 2020, the company has grown significantly in both revenues on the SaaS model, on the platform, and the media department. We're now in a position where we deleveraged our financial loans. We repaid a bond, and we refinanced the other part of the bond in the summertime. We're now in a position where we're looking at adding on potential M&A targets. We're looking at creating shareholder value if it's that we need to maybe be listed in Sweden, Norway, or other places. We are having a razor-sharp focus 2022 to create shareholder value. And we are looking into all the areas where we can see significant growth. And our platform is in a position where it's now getting licensed in more and more places, and we can take one client to multiple places, like William Hill. We have 2 clients for them in Latvia and want to expand those brands into new markets where we have license. So we're looking at all the opportunities going forward. I'm very happy with where the company's positioned itself. With the platform right now, business where everyone has old tech legacy platforms, and the markets are regulating, we're seeing a sweet spot for us where we're putting all our focus and emphasis to getting our platform certified and licensed and be able to target new markets and integrate clients faster. I think that's the key for us to win those big contracts, to take them to new markets. And we're really looking into that, and we have taken leaps and bounds during these 2 years, and we will continue this work going on to the next couple of years as well. And a big question is how we are going to position ourselves going forward with the conglomerate situation that we have as well. And whatever makes sense for the market, whatever makes sense for the companies, that's where we're looking at, and we're looking at all the possibilities going forward to create shareholder value. That was basically everything for me.
All right, thanks for the presentation, Hasse. And I
Very hot in here. By the way.
Yeah. So I will continue with some Q&A, and so my first question is touching upon the M&A agenda. What are your targets? In which segments are you looking at? And
so basically, like the targets we're targeting, we're looking at where we are weak right now and where we can accelerate revenues. So basically for us, we're looking at all the aspects. If it's the media division, if it's the US assets, or if it's in the sportsbook segments, or if it's in the areas in the platform where we think we can add value to that. So we're basically open for everything. And with our cash balance and our net debt leverage sinking quarter over quarter, we're in a position where we can leverage on that. And we have multiple potential clients targets that we're looking into, and whatever makes the most fit, we'll try to go after that. But we're actively searching for multiple in every vertical that we're operating in right now.
all right, thanks. So moving on, can you talk a little bit about your trajectory touching upon the North American market? Do you have any key states or any key focuses in terms of segments?
Yes. Right now, for the platform business, we are licensed in Iowa. We're licensed in New Jersey. We're getting a license in Pennsylvania. And we have a current client, Playstar, that will go live in 2022. We are also we hired a new head of sales in US that will help us expand our footprint, and we're hopeful that we can sign some more clients in North America in the coming year, in 2022 and onwards. So we're really looking into that. It's a very interesting market. We're looking at all the targets that we're able to take. And now in 2022 and onwards, we're seeing a new wave of brands that will come in. The new wave, like Playstar is coming in, LeoVegas is coming in. And we're seeing some of the European markets, European B2C clients that want to take place in the US market. And especially there is a very big momentum for us because we have a good footprint and a good reputation with European clients. So we're looking at that as well, and some land-based casinos that want to go online. But we need more and more markets that regulate casino, and that will come.
All right. Further, we look at your revenue guidance or growth guidance of double digits. How are you going to manage or succeeding with that target in terms of what are your key focus markets to get there?
Our key focus, our market is the whole world, so we're focusing every aspect of the company of the world. So wherever there is opportunities, we will go there if it makes sense. We're very return on investment oriented company. So for platform, for example, our strategy going forward is to get more licenses. So when our platform get licensed in certain markets, like we have a license in Croatia where we operate for Betsson as of today, and Latvia, and so on and so forth. So we're trying to get more and more our platform more and more certified in certain markets, so we can take one client that we have to 10 different markets. So each client value will rise with the same cost levels. So we're trying to keep the cost at the same level or even decline it going forward with the technology that we're building up and improving our platform day by day. For example, if you make one improvement on the platform for Spain, example, you can reuse that for the Argentinian license that we got. So every license we make, we get more and more efficient. We can use that, and the cost of getting a license in every market is going to be easier and cheaper. And for media, we're just keeping the same trajectory, opening up new markets, getting licenses in US, focusing cost control, have a very strict in how we which markets we want to go into, and what kind of edge do we have, and take our key sites and grow them to new markets as well. We have one site called the Casino Tops Online, which is our biggest brand. We want to take that to new markets, and that's a very good strategy, and that's been paying off for us.
All right, thank you for that. I believe that will conclude this session. I want to thank you, Hesi, for the presentation, and thank you all for listening in. And I wish you all a pleasant evening, as this is our final session. So that's all for today.
Thank you very much.